In 2025, most of the U.S. housing market is crumbling. Prices are falling, listings sit untouched, and sellers are slashing numbers in desperation. But in a handful of cities, the story is wildly different. Here, homes are vanishing in under a week, bidding wars are erupting with offers $30,000 over asking, and prices have skyrocketed by up to 40% since 2020. In these markets, a $280,000 starter home now demands $420,000, and rent? Try $2,200 for a two-bedroom. As the national market cools into chaos, these 10 cities are on fire, epicenters of growth, speed, and fierce demand. These are America's hottest housing markets of 2025. Number 10, Salt Lake City, Utah. Salt Lake City continues to be a magnet for homebuyers in 2025, and it's not hard to see why. This mountain-backed metro blends economic strength, youthful energy, and natural beauty with a fast-moving housing market that's drawing attention nationwide. The average home in Salt Lake City is now priced around $545,000, a significant jump from just 5 years ago when the median hovered near $405,000. That's over a 34% increase, reflecting both high demand and limited supply in a city squeezed between mountains and the Great Salt Lake. Homes here are spending just 19 to 22 days on the market, far below the national average of around 35 days, signaling how fast buyers are pouncing on available listings. One key driver is the city's strong job market. With unemployment under 3%, Salt Lake City has become a hub for tech startups, healthcare, and finance, often called Silicon Slopes. Combine that with Utah's booming population, growing at a rate of nearly 1.4% per year, and you get a pressure cooker of housing demand. Builders are racing to keep up, but new construction is constrained by land and zoning challenges. In fact, for every new job added, only about 0.7 new housing permits are issued, creating a supply-demand imbalance that keeps prices elevated. Despite rising home prices, Salt Lake still holds an affordability advantage over pricier tech hubs like San Jose or Seattle. The average mortgage payment here is around $2,700 per month, with 7% interest and 20% down, compared to over $4,000 in comparable Western metros. Renters, too, are feeling the pinch. Monthly rents for a two-bedroom apartment now average $1,900, up from $1,450 in 2020. Yet people continue to move in, drawn by the area's access to world-class skiing, family-friendly suburbs, and a high quality of life. For buyers looking to act quickly in 2025, Salt Lake City remains one of the West's most competitive and compelling housing markets. Number 9. Richmond, Virginia. Richmond, Virginia is quietly becoming one of the most dynamic housing markets on the East Coast in 2025. With a median home price around $385,000, Richmond strikes a rare balance between affordability and growth. That's up from roughly $310,000 just 3 years ago. A 24% increase driven by population growth, job expansion, and a surge in remote workers choosing mid-sized cities over larger coastal metros. What makes Richmond stand out is how fast homes are moving, averaging just 9 to 11 days on the market, making it one of the quickest-selling markets in the region. What's fueling this momentum? For starters, Richmond's economy has become increasingly diverse. Financial services, logistics, and biotech are expanding, and the city's central location within a day's drive of 40% of the U.S. population keeps it attractive to businesses. That stability has brought an influx of buyers, many relocating from Washington, D.C., where median home prices exceed $700,000. These incoming buyers often come with stronger budgets, bidding up homes in once affordable neighborhoods. In many areas, list-to-sale price ratios are over 102%, meaning buyers are frequently offering above asking just to win a home. Rental demand is also growing rapidly. The average two-bedroom apartment now rents for about $1,850 a month, up nearly 30% from pre-pandemic levels. Investors are flocking to Richmond for its favorable rent-to-price ratios and relatively low property taxes. At the same time, new construction is struggling to keep pace. Many local builders report being backlogged with demand, particularly for entry-level homes under $400,000, which are in critically short supply. But what really sets Richmond apart is its livability. It blends historic charm, walkable neighborhoods, and vibrant arts and food scenes, all factors that appeal to younger professionals and retirees alike. With mortgage rates hovering near 6.5%, the average monthly payment on a Richmond home is still under $2,500, making it a solid value for buyers seeking both lifestyle and long-term equity. In short, Richmond in 2025 is a market of speed, scarcity, and growing opportunity, where smart buyers are acting fast to stake their claim. Number 8. Kansas City, Missouri. Kansas City is proving that you don't need to be coastal to be hot. In 2025, it's one of the Midwest's fastest-moving housing markets, with homes typically selling in just 8 to 10 days, and the median price landing around $335,000. That's up from $270,000 in 2021, a gain of nearly 24% in just 4 years. The city's dual-state geography gives it added flexibility, drawing buyers from both Missouri and Kansas suburbs looking for larger homes, lower taxes, and less competition than in flashier metros. But don't mistake affordability for lack of heat. Kansas City has seen a dramatic uptick in demand due to job growth in manufacturing, logistics, and tech. Major employers continue expanding in the area, while Kansas City's central U.S. location makes it ideal for distribution and warehousing. With job creation outpacing home construction by a 1.3 to 1 ratio, demand is outrunning supply, and prices are feeling the pressure. For buyers, Kansas City still offers relatively low monthly costs. Even with rates near 6.5%, the typical monthly mortgage for a median-priced home is around $2,200, hundreds less than similar homes in other metro areas. Rents are also climbing steadily, with average two-bedroom units now leasing for around $1,650 a month, up from $1,300 in 2020. Investors are zeroing in on the city for its combination of rental cash flow and appreciation potential. Kansas City's neighborhoods offer a diverse range of options, from historic homes in Brookside to suburban-style developments in Overland Park and Lee's Summit. First-time buyers are finding value in North Kansas City, and the downtown revival continues to attract young professionals. The city also benefits from an ongoing infrastructure boom, including transit improvements and green space revitalization that increase long-term desirability. In 2025, Kansas City is less about flashy headlines and more about real, sustainable demand. For buyers seeking long-term value with competitive pricing and solid growth potential, Kansas City is a rising star on the national housing map, and homes are vanishing quickly. Number 7. Charlotte, North Carolina. Charlotte has firmly planted itself as one of America's hottest housing markets in 2025, and it's showing no signs of cooling. The city's median home price has soared to around $455,000, up nearly 30% from its pre-pandemic level of $350,000. Despite the price growth, homes in Charlotte are flying off the market in just 10 to 12 days, making it one of the fastest-moving real estate markets in the Southeast. Charlotte's booming economy is a key factor. It has emerged as a financial powerhouse, second only to New York City in banking assets, and it's also seeing rapid job growth in fintech, healthcare, and logistics. Every year, thousands of newcomers, particularly from the Northeast and California, relocate to Charlotte in search of jobs, sunshine, and affordability. This migration wave has added enormous pressure to the housing market. For every 10 new residents, only about 6 new housing units are being built, which is creating a persistent supply squeeze. Even with rising prices, Charlotte remains a relatively affordable option compared to peers like Atlanta or Raleigh. A buyer putting 20% down can expect a monthly mortgage around $2,900 at a 6.5% rate, which is still manageable for many dual-income households. Rents are also on the rise, with two-bedroom apartments averaging $2,050 per month, up from $1,600 just a few years ago. This surge has caught the attention of investors looking to tap into both appreciation and rental income streams. What makes Charlotte unique is its suburban diversity. From upscale South Park to family-friendly Ballantyne and revitalized No-Da, buyers can find nearly every flavor of lifestyle. The city also boasts strong public infrastructure, modern amenities, and access to the Blue Ridge Mountains and Carolina coastlines. It's a city that offers career growth, climate appeal, and long-term housing stability. In 2025, Charlotte isn't just a hot market, it's a proving ground for the future of urban growth in America. With limited inventory and increasing buyer competition, those looking to get in now are moving fast before the next wave pushes prices even higher. Number 6. St. Louis, Missouri. St. Louis might surprise some as a 2025 housing hotspot, but this Midwestern giant is quietly delivering one of the fastest-paced markets in the region. With a median home price of around $305,000, up from roughly $245,000 in 2021, St. Louis offers serious value alongside real appreciation. Homes are averaging just 8 to 10 days on the market, showing strong buyer urgency in a city long known for affordability. Unlike many metros where bidding wars are reserved for luxury homes, St. Louis sees aggressive offers even in the $250,000 range, particularly in neighborhoods like Tower Grove or Maplewood. Part of this growth is fueled by economic diversification. Once reliant on manufacturing, St. Louis has seen growth in healthcare, biotechnology, and logistics, helping attract both local and out-of-state buyers. The job-to-permit ratio here sits around 1.1, meaning for every new job created, just one home is permitted. Barely enough to keep up, which keeps demand hot and inventory tight. For buyers, financing a median-priced home with 20% down and a 6.5% interest rate, the monthly mortgage is still around $2,000, well below national averages. The rental market tells a similar story. A standard two-bedroom now leases for about $1,600, up 20% since 2020. Investors are scooping up multifamily units, especially in emerging areas just outside the city core. Property taxes remain low compared to Illinois neighbors, making homeownership more attainable, especially for first-time buyers. But what truly elevates St. Louis is its livability. The city boasts walkable neighborhoods, historic brick homes, lush parks, and a rising food and arts culture. Commuting is reasonable, and St. Louis Lambert International Airport provides easy travel access. For families, young professionals, and retirees alike, the city blends affordability with charm and upward economic momentum. In 2025, St. Louis isn't chasing flashy headlines. It's delivering solid returns, fast-moving inventory, and an enviable cost of living. Buyers are noticing, and they're acting quickly to get in before prices creep higher. Number 5. Philadelphia, Pennsylvania. Philadelphia's housing market in 2025 is moving at full throttle. Despite being a major East Coast city, Philly remains one of the most accessible urban centers for homeownership, with the median home price sitting around $390,000. That's up from $320,000 just 4 years ago, a gain of roughly 22% that reflects both population growth and market demand. What's driving the buzz is the pace. Homes in Philadelphia are now selling in an average of just 11 days, especially in hot neighborhoods like Fishtown, Brewerytown, and Point Breeze. Philadelphia benefits from strong economic fundamentals. It's a hub for healthcare, education, and finance, with a growing startup scene as well. Importantly, Philly draws in buyers from New York City and Washington, D.C., where home prices can be double or even triple. This creates upward pricing pressure in many neighborhoods that were considered undervalued just a few years ago. The job growth-to-permit ratio is tight, hovering around 1.4, which means for every 14 jobs created, only 10 housing units are permitted. That imbalance continues to tighten supply. For buyers, the numbers still work. A $390,000 home with 20% down and a 6.5% mortgage rate results in a monthly payment of about $2,600, significantly lower than comparable metros like Boston or NYC. Rentals, meanwhile, are surging. A two-bedroom apartment now averages $2,100, up from $1,650 in 2020, signaling robust demand and rising investor interest. Philadelphia offers an urban lifestyle with authentic charm. Historic row homes, cobblestone streets, vibrant culture, and professional opportunities. Public transit access, walkability, and proximity to regional rail make it attractive to commuters and young professionals. The city also offers significant property tax advantages compared to surrounding suburbs. In 2025, Philadelphia has become a market where speed matters. Buyers have to act fast, bring competitive offers, and be prepared for tight inventory. With rising values and a city that blends history with momentum, Philly is not just hot, it's heating up more every quarter. Number 4. Hartford, Connecticut. Hartford may not be the first city that comes to mind when discussing red-hot housing markets, but in 2025, it's quietly outperforming expectations. With a median home price around $360,000, up from $290,000 in 2021. That's a 24% price increase in just 4 years. What's most impressive is how fast homes are selling here. Listings are going pending in just 7 days on average, making Hartford the fastest-moving market in the Northeast. It's no wonder buyers are scrambling to get in before prices climb further. One reason for this market acceleration is Hartford's economic transition. Once a stronghold for insurance and finance, the city is diversifying into healthcare tech, education, and remote-friendly professions. This has attracted both local buyers and transplants from Boston and New York, who see Hartford as a more affordable and livable alternative. Job growth is outpacing housing supply by nearly 2 to 1, and new construction hasn't kept up, leaving inventory near record lows. Despite the appreciation, Hartford remains budget-friendly by regional standards. With 20% down and a 6.5% mortgage rate, the monthly cost of owning a median home is roughly $2,400, far more manageable than in neighboring cities. Meanwhile, average two-bedroom rents are up 25% since 2020 and now sit around $1,850, creating strong rental returns and attracting investors who previously overlooked the city. Hartford's appeal lies in its balance: charming neighborhoods, quality schools, and a central location that allows easy access to Boston, NYC, and the Connecticut coastline. First-time buyers are flocking to areas like West Hartford, while professionals are scooping up historic homes near the downtown corridor. The city's infrastructure improvements, including transit expansions and riverfront development, are further enhancing its appeal. As affordability tightens elsewhere, Hartford is emerging as a top-tier housing market, offering high-speed, solid returns, and plenty of upside. Buyers in 2025 aren't hesitating, and that momentum shows no signs of slowing. Number 3. Providence, Rhode Island. Providence has surged into the national spotlight as one of the most competitive housing markets of 2025. With its median home price now hovering around $430,000, up from $345,000 just 4 years ago. That's a substantial 25% rise. Despite the increase, homes are still selling in record time. In many neighborhoods, properties are going pending in just 10 to 12 days. Buyers are submitting offers well above asking, especially for homes under the $500,000 mark, which are becoming rare. Why the frenzy? Providence sits in a strategic location between Boston and New York City, offering a far more affordable lifestyle. Transplants from Massachusetts and Connecticut are flooding into the market, bringing big city budgets to a mid-sized city. This has pushed demand through the roof while new housing permits lag significantly behind population growth. The job-to-permit ratio is close to 1.5, meaning for every 15 jobs added, only 10 new homes are permitted, tightening inventory even further. Buyers financing a typical home with 20% down and a 6.5% interest rate can expect a monthly payment around $2,750. Meanwhile, average rent for a two-bedroom apartment has risen to $2,200, up from $1,700 in 2020. Investors are increasingly eyeing Providence as a stronghold for long-term appreciation and reliable rental returns. But it's not just about numbers. Providence is packed with charm. From historic Federal Hill to the walkable East Side, the city offers cobblestone streets, colonial homes, waterfront views, and an artsy vibe that appeals to both millennials and retirees. Its compact urban core, proximity to beaches, and major infrastructure investments like riverwalks and rail improvements have only increased its appeal. In 2025, Providence is a fast-paced market where buyers must act quickly and decisively. It combines small city livability with big city access, making it one of the most desirable and fastest-moving real estate markets in the Northeast. Number 2. Indianapolis, Indiana. Indianapolis is turning heads in 2025 as one of the most undervalued but fastest-moving housing markets in the country. With a median home price now near $325,000, up from $255,000 just 4 years ago, that's a 27% increase driven by relentless demand and tight supply. But despite this price growth, homes here are still remarkably affordable by national standards. Properties are flying off the market in just 10 to 14 days, with multiple offers becoming the norm rather than the exception. What makes Indy so attractive is its blend of economic strength and cost of living. The city boasts a healthy job market with major employers in logistics, healthcare, and tech. Job creation has outpaced new housing permits nearly 1.8 to 1, creating fierce competition, especially for homes under $400,000. Buyers are acting fast because they know that in this market, hesitation can mean losing out. With 20% down and a 6.5% interest rate, the typical monthly mortgage payment is around $2,100, making Indianapolis a relative bargain for a large metro. Rental demand is also climbing. A two-bedroom apartment now averages $1,750 per month, up nearly 30% since 2020, prompting investors to enter the market in large numbers. Indianapolis offers more than just affordability. It delivers lifestyle. Neighborhoods like Fountain Square, Broad Ripple, and Meridian Kessler offer walkability, culture, and dining, while suburban areas like Carmel and Fishers attract families with space and strong schools. Infrastructure investments, a growing tech corridor, and improved transit options are helping fuel further growth. In 2025, Indianapolis hits the sweet spot: rising prices, fast sales, and room to grow. It's a city where homeownership still feels attainable, but competition is fierce. Whether you're a first-time buyer or a seasoned investor, Indy's housing market is one of the best bets in the country right now. Number 1. Buffalo, New York. Buffalo claims the crown in 2025 as the hottest housing market in America, and it's earned it. With a median home price now at approximately $295,000, up from $215,000 in 2020, that's a whopping 37% jump in just 5 years. What's more remarkable is the speed. Homes here are going under contract in just 7 to 9 days, with some neighborhoods seeing properties snapped up within 48 hours. Multiple offers, cash buyers, and waived contingencies have become standard practice in a city once known for slow sales and bargains. The surge is driven by an influx of residents from more expensive metros like New York City and Boston, where home prices are 2 to 3 times higher. Buffalo offers a compelling combination of affordability, livability, and upward economic mobility. The job-to-permit ratio is among the tightest in the nation, roughly 2.0, meaning only one housing unit is permitted for every 2 jobs added, causing a chronic housing shortage. Despite the appreciation, Buffalo remains budget-friendly. A 20% down payment and 6.5% mortgage rate on a median-priced home results in a monthly payment of about $1,900, an amount nearly impossible to find in other major housing markets. Rents, too, are surging. A 2-bedroom now averages $1,650, up from $1,150 in 2020, a 43% increase, making it extremely attractive to investors and developers. But Buffalo's rise isn't just numbers, it's about transformation. Historic neighborhoods like Elmwood Village and Allentown have seen revitalization, while waterfront projects and adaptive reuse developments have breathed new life into the urban core. The city is also attracting remote workers, tech startups, and even digital nomads drawn to its cultural scene and proximity to Canada. In 2025, Buffalo offers that rare housing trifecta: affordability, velocity, and potential. It's no longer a hidden gem. It's a fast-moving, highly competitive market where buyers must move decisively. If you're looking for strong appreciation, quick sales, and a community on the rise, Buffalo isn't just hot, it's on fire.